Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. So let's recap that shortened trading session Wednesday and get ready for Friday's action, starting with Bloomberg's evening briefing. Guys, I read them all. This is the best one. New labor data added further evidence that the U.S. jobs market is indeed slowing down. Companies hired workers at a more moderate pace in June, and wage growth cooled as recurring claims for unemployment benefits rose for a ninth straight week, the longest stretch since 2018. Two reports coming ahead of Friday's June employment data suggest weaker demand for workers. A separate measure published Wednesday showed that the U.S. services sector contracted last month at the fastest pace in 4 years. Another sign that the economy is losing steam as the U.S. Fed Reserve looks to time its pivot to rate cuts in a bid to cement a soft landing. It's been hesitant to pull the trigger. New minutes from a recent meeting show why. Meanwhile, stocks hit yet another record on Wednesday. So the S&P 500 added 28.01 to rise 0.51%. The Dow lost 2390 to drop 0.06%. NASDAQ added 159.54 to gain 0.88%. Crude oil is solidly over 80 at 83.39, even though it lost 50 cents or 0.58%. And yesterday, gold was flat, 23.69.40. From Teslarati today, Elon Musk sends stern warning to Tesla short sellers, you'll be obliterated. This is why I love the man. And on topic from CNBC, Tesla short sellers lost $3.5 billion in 2 days of trading after deliveries report. Tesla shares have jumped this week, sparked by a better than expected deliveries report for the second quarter. The rally has hurt short sellers who are betting on a drop in the stock. Investors will get a clearer picture of Tesla's finances later this month when the company reports quarterly earnings. And from yesterday, Tesla bull Cathie Wood's ARK just sold $15 million worth of the stock. As Tesla's stock is surging, ARK Invest, led by Cathie Wood, has made significant adjustments to its portfolio by selling off a substantial number of Tesla shares. Despite the significant sell-off, Tesla remains the largest holding in ARK's portfolio, comprising 14.6% of all assets, valued at over $191 million as of Wednesday morning. But what did she buy with the money? Uncle Frank's pick, Archer Aviation. ARK bought 406,912 shares of Archer, totaling $1,391,000. Cathie, if you buy another 400,000 shares, I'll toss your salad, girl. So what are the recent headlines behind Archer Aviation's spike? Well, you already know Cathie Wood is loading up on Archer Aviation stock. And then Stellantis parks an additional $55 million in Archer Aviation on milestone achievement. And Archer Aviation price target maintained at $10 a share by Cantor Fitzgerald. But check out the timing on the following hit pieces. So if you think Archer doesn't get hit pieces like GameStop and AMC, think again. Archer Aviation, promising vision, although commercialization remains in early stages. So this author, who hides behind the company's name, First Principles Partners, put this piece out on July 2nd, 3:44 a.m. That's right, 3:40 in the morning. Now, guys, 2024 is more than half over, and commercialization is coming in 2025. He can't say anything negative because there's nothing negative to say. In my opinion, he was told to come out and remind everyone how early it is in the game for the stock, even though the shorts drilled it down over 57% over the past 5 years, right? From his article, Archer Aviation is a strong competitor in the urban air mobility sector with a 50% market growth potential each year. Intense competition in the industry from companies like Joby, Vertical Aerospace, Lilium, EHang, and Wisk Aero. But Archer is leading in terms of design and certification progress. Archer's progress in prototype and certification is promising, with plans for commercial flights by 2025 and evaluation of 589 representing over a 60% upside. Now, guys, this is stuff we all knew before July 2nd, but this guy had to come out between 3 and 4 o'clock in the morning and let everybody know, hey, listen, this commercialization remains in early stages. Now, here's another one from 3 days ago, July 1st. Again, no author's name from Simply Wall Street. This one's more naked. Archer Aviation's recent 5.9% pullback adds to one-year losses. Institutional owners may take drastic measures, right? Every investor in Archer should be aware of the most powerful shareholder groups. With a 37% stake, I've actually got it 10% higher. Institutions possess the maximum shares in the company. Put another way, the group faces maximum upside potential or downside risk. And institutional investors saw their holdings value drop by 5.9% last week. The recent loss, which adds to a one-year loss of 17% for stockholders, may not sit well with this group of investors. Often called market movers, institutions wield significant power in influencing the price dynamics of any stock. You better sell. Hence, if weakness in Archer Aviation's share price continues, institutional investors may feel compelled to sell the stock, which might not be ideal for individual investors. All right, so let's take a look at Archer's chart and see how these warnings worked out for investors that actually read these shit-stain articles. So guys, here's the hourly chart for Archer, and I left pre- and aftermarket sessions in there. I also added a yellow arrow pointing to pre-market July 2nd, or the morning before the stock began its two-day ascent. So on the 1st and 2nd, these people are warning you that institutions may begin mass selling, and you should be wary because commercialization is really a way off. Look at the move you would have missed if you heeded the advice of the galactically stupid. The stock has literally vaulted from the time of their warnings. The question remains, did someone ask you guys to write these pieces? Just asking for a friend. So guys, here's the institutional ownership Simply Wall Street wants me to be worried about. Forget that Cathie Wood just upped her position in the stock from Fintel.io. I've got institutional shares, longs, at 157,181,000, or 48.58%. That's X13D and G, right? That's a change of 7.35 million shares, or up another 4.91%. But Simply Wall Street warned us that they may begin bailing. Is that what this chart is telling you? So on Wednesday, Archer started the morning pre-market at 374, got to as high as 433, and then finished at 421 for the day, up 49 cents or 13.17%. Then, after hours, she tacked on another 11.5 cents or 2.73% to conclude the evening session at 4.325. Now, off-exchange volume on Wednesday, if you start to lose, just cheat, right? Only 15% of Archer's volume was executed on the exchange it's listed on. So well over 50% must have been block trades because that was all done in the dark pools. At the time of this recording, I've got 200,000 shares available to lend and short with a cost to borrow fee of 18.86%. That can certainly change before the bell on Friday morning, options expiration day, so double check that. Now, in the money, out of the money for July 5th, calls in the money, 1,335. Calls out of the money, 28. Puts in the money, 0. Puts out of the money, 386. At the time of this recording, for the July 5th expiration, I've got Max Payne at 350. Now, at the time of this recording, I'm disappointed to report that Archer Aviation is not on the Reddit sentiment and mention tracker over the past 24 hours, but I'm delighted to report that GameStop is number 1 ahead of Nvidia, and Tesla's in 5th, and AMC is hanging in there in the 14th position. Well, Beverly Hills Cop Axel F came out last night on Netflix. It's not even going to play in the theaters. Therefore, I hope it bombs. I would have went to go see it just to support the theater, but now I hope the clicks match the reviews. Beverly Hills Cop, a poor script dooms nostalgic buddy cop reunion. So let's check the most shorted stocks at Yahoo Screener. I've got the criteria set. Region, US. Price, intraday, greater than $1. Average volume over 3 months, greater than 200,000 shares. And the exchange is set for the New York. I see 1,640 results. Let's check them out. In the top 25, the only one I'll mention is Cinemark in the 14th position, believe it or not. I don't believe it shorted more than AMC or GME, but don't kill the messenger. On page 2, I see AMC in the 27th spot, and Archer is the 39th most shorted stock on the New York based on this criteria. No sign of GameStop here. That doesn't mean there's not a huge short position against it. Hey, I want you guys to know our new board member, Miss Sonia Jain, who joined our company just this past March 1st, already has over 19,000 shares of AMC to her name, and based on yesterday's close, that's worth about $96,000. Not bad for 4 months of work, right? She's going to fit right in at our company. Sonia joined Outerwall, that's the former parent company of Redbox, in 2010 as the director of corporate finance, and quickly advanced through the organization. When Outerwall was acquired in 2016 by Apollo Global Management, a global alternative investment manager with approximately $249 billion under management, Adam Aron was a partner there for 9 years just before running AMC into the ground. Sonia later became the chief financial officer of Redbox after helping Apollo buy Outerwall. You see how that works? Sonia also comes from Morgan Stanley Investment Banking, and lucky for her, so does our CFO, and the guy who runs our board still works for Morgan Stanley. So if you're confused, I'll make this easy for you. Wall Street runs AMC and always has. From Reuters yesterday, South Korea fines Credit Suisse for illegal stock short selling. We're still waiting for Gary to nail Credit Suisse for their trading of AMC. I don't know what you're waiting for, Gare. You're leaving that money on the table, in my opinion. And speaking of Gary, from The Block today, Coinbase argues Gary Gensler's email is an appropriate source of discovery in SEC lawsuit. I think I just heard Donahue George fall off his couch. And speaking of Donahue George, he's going to be delighted to hear that Archer Aviation has made it onto one of his favorite lists, large market on close stock order imbalances. Okay, let's do AMC's chart. On your screen is the hourly. Again, I have the after and pre-market sessions in there. AMC has been recovering over the past few days. We're back over 50 cents on a pre-split basis, a split we never needed to do, but Wall Street desperately appreciated. So on Wednesday, AMC got as high as 533, then exactly at 10:30 Eastern, both AMC and GME began a sharp sell-off together simultaneously, one theater stock and one video game retailer. I put a little GME chart on the screen too. I don't know if you can see it, But check it out on your chart software. They're identical. I count 7 red candles for AMC and 6 for GameStop. Perfectly synchronized. You got to admit, this kind of manipulation in the open is pretty impressive. I wish I could control shit like that. You guys would love me more than all the other YouTubers combined. You'd be clicking on that like button like a hamster looking for another cocaine pellet. Anyway, after that, AMC dove to a low of $4.95 and finished the simulated trading at $5.03, down 18 cents or 3.45%. Now, obviously, Friday is options expiration day. I see 34,763 calls in the money. I see 80,277 out of the money. On the put side, 2,192 in the money and 28,830 out of the money. You've got to imagine, since Max Payne at the time of this recording for the July 5th expiration is 5, they're going to want to keep us pretty close to 5 or under 5 tomorrow. I see 1.3 million shares of AMC, formerly known as APE, available to lend and short at a cost to borrow fee of only 1.59%. Obviously, that could change before the bell, so double check those numbers. Dark pool on Wednesday, nearly 60% off exchange. I mean, we're really popular for block trading. Only 12.47% of AMC's shares were traded on the exchange that we're listed on. So then after the close, we barcoded perfectly with GME. It's impressive. I mean, it's almost a straight line to finish the after-hours session at 5.06, up 3 cents or 0.60%. So let me tell you where I stand on AMC. I think it's dead money for now. I know a lot of you don't want to hear that. I did do some buying under 5 yesterday. But number one, Adam Aron could put this stock at $10, $15, $20 per share in 1 minute. All he'd have to say is, I'm done diluting for 2024 unless there's an emergency, and he will never do that. Number two, I do see some catalysts. We have 3 potential blockbusters dropping this month. We will start to hear more about our performance for Q2 of 2024 soon, but that could go either way, right? We could get a surprise announcement from Ryan Cohen about the future of GameStop, and AMC might chase GameStop up again, or we could even get an exciting, unexpected tweet from Roaring Kitty. But I think he's been warned and will probably stay away from anything that will anger the regulators, and by that I mean Wall Street. We could also get a surprise concert film announcement. But after the Billie Eilish listen-only concert, I'll have to see that before I believe it. We could get an announcement from Adam Aron about our debt negotiations with our lenders. Maybe they'll allow us to push maturities out, or maybe a loan modification plan. Now, if all these things happen in a group or one after another, or you see a whiter black swan land on a day when we're getting unexpected results on economic data, well, then we're off to the races. The fact is, dirty tricks like spoofing, hit pieces in the press, naked shorting, that shit doesn't work against margin calls. When you're leveraged to the sky, 60 to 1 or even higher, and you get margin call because you're short Tesla and they just released epic surprise good news, you're not going to be able to spoof your way out of that, okay? Even if we get a short covering event, Adam Aron will not forget to dilute. And the Limit Up, Limit Down Committee will not forget to halt the stock to protect Wall Street. No, it's going to take a swan event to turn the primes against their clients, the hedge funds. You guys know I can't promise one. All I'm saying is we got a swan in 2008 and 700 hedge funds closed. Now, forgive me in advance if my numbers aren't the latest on this slide. I'm just trying to make a point. We all know AMC is the largest movie exhibition company in the US, in Europe, and in the world. They've got about 900 theaters with 10,000 screens around the globe. Now, estimates are that AMC currently holds around $4.5 billion in debt, with more than $2.8 billion coming due in 2026, which we're negotiating right now. Some may argue if you add back rent, suddenly we're near $9 billion. But let's use the numbers the analysts use just to make this point. So if I divide $4.5 billion in debt by 10,000 screens, I get $450,000 in debt per screen. Now, Cinemark, they've got like 518 theaters, right? 5,847 screens. According to Cinemark's latest financial reports, they're about $3.55 billion in debt. So if I divide $3.55 billion by 5,847 screens, I get $607,000 in debt per screen compared to AMC's 450. So why is Cinemark doing so great this year and we're taking it in the butt, Uncle Frank? Well, guys, retail owns AMC. AMC insiders own less than 0.5%. We pay our CEO triple, more than triple what they pay the Cinemark CEO. Our firm is run by distressed credit private equity executives. Their firm is run by theater and entertainment executives. Cinemark has never done a reverse split. They don't invest in bankrupt gold mines. They didn't invest $1 billion in Saudi Arabia and then sell out for $30 million. If they did, the CEO would be long gone by now. Am I right? So it's Thursday morning, happy 4th of July, and at the time of this recording, crypto is selling off hard. From Reuters, Bitcoin hits 2-month low on election uncertainty and Mt. Gox flows. Bitcoin slid to a 2-month low on Thursday, extending a month-long fall as uncertainty over U.S. presidential elections and reports of Bitcoin supply from a defunct Tokyo-based crypto exchange weighed. Bitcoin fell more than 2% to 57,843, its lowest since May 2nd, and has lost more than 6% so far this week. The world's biggest cryptocurrency has been under pressure in recent months, its slide accelerating this week after the first debate between U.S. presidential candidates Joe Biden and Donald Trump raised the specter of Biden being replaced as a candidate. Any chance Wall Street is using the crypto market for a piggy bank ahead of a sell-off in equities? The financial press will never say it out loud, but I will. Bitcoin had a strong start to the year after the launch of exchange-traded funds in the U.S., propelling it to a record 73,803 in mid-March as investors poured in. However, the rally has fizzled, with Bitcoin losing more than 21% since then. Analysts also pointed to reports that Mt. Gox, the world's leading exchange for cryptocurrencies before it went defunct in 2014, is repaying its creditors, which could be dragging Bitcoin lower if those creditors offload their tokens. At the time of this recording, every crypto on my watch list is red, and yes, I'm bottom feeding on XRP at these levels. Breaking yesterday, Russia favors cryptocurrency for international payments to counter Western sanctions. Authorities in Russia have encouraged businesses to adopt crypto for international payments. Russia is under sanctions imposed by Western countries over the war in Ukraine, making it difficult to execute payments with international partners. Russia and other BRICS member states are discussing a system to bridge the gap, and this confirms what Uncle Frank has been bitching about all along. This is what the case against Ripple XRP is actually all about: the power to sanction. This is one of the reasons the SEC targeted XRP out of tens of thousands of projects, because it's the best mousetrap in the world for cross-border payments, and the U.S. government wants to control it so it can punish its enemies at will to score political points. That, and Gary Gensler wants the power to run around and fine everyone like he does on Wall Street. Breaking this morning from FX Street, Ripple traders realize over $75 million in losses for July. Is an XRP sell-off coming? I hope so. Ripple traders took over $75 million in losses in July per Santiment data. Well, not Uncle Frank, because he's buying this sell-off, not investment advice or advisor. Ripple whales have distributed XRP at a loss in the past 30 days, while retail investors accumulate the altcoin. Ripple's MVRV has dipped into the opportunity zone, where XRP price typically recovers. XRP dipped under key support at 0.4508, Ripple's June 7 low. Okay, let me be clear about my position on XRP. These are the potential catalysts ahead for this project, and I will own this coin past all of them. Number one, the eventual resolution of the SEC's case against Ripple XRP. It can't go on forever. Mass adoption phase for Ripple XRP by the global banking system. That's going to begin right after this case is wrapped. We may see Elon Musk launch his Twitter payment system in 2024, and that could include XRP, XLM, and/or Doge, in my opinion. We will see the eventual IPO of Ripple itself, which will be huge for XRP, and we will see the launch of multiple XRP ETFs, which I believe may be bigger than Bitcoin's and Ethereum's in the wake of a mass adoption phase by global banks and the price point of XRP at that time. That's it. I want my subscribers to be aware we are 78 days to the second day of the September Fed meeting. That's when everyone is convinced we're going to get a rate cut, right? We're also 124 days out from the election date of November 5th. I feel these are the most important dates on the calendar so far. We need to watch closely as we approach both of these important milestones. These are going to be market-moving days and even weeks, no doubt in my mind. But what will happen if we get a black or white swan before the September Fed meeting or before the election? I believe there's a 30% chance of a swan event before September 18th and a 50% chance of one before the election date of November 5th. What do you think? Put it in the comments. Okay, so let's do the calendar. Friday, July 5th, 8:30 a.m. Eastern Time, the U.S. employment report and rate. That's going to be big. Next week, on the 10th, we've got a CAT event, industry testing checkpoint call, and industry member CAS report card webinar, right? Thursday, CPI. Friday, PPI. And one weird thing about this month is the Fed meeting will be at the end of the month. Monday and Tuesday, July 29th and 30th. So, Uncle Frank, nothing on the calendar on Ripple XRP? I got you. The SEC's lawsuit against Ripple Labs has inched closer to a final verdict. 2 dates in July hold the potential for significant impact. The case's outcome could establish a precedent for future crypto regulations. With a verdict expected by the end of July 2024, the crypto community awaits a decision that could significantly impact the XRP market. 2 potential dates have emerged for the verdict. The first lands on July 31st, marking the official closure of a legal battle that has dragged on for more than 3 years. However, another date holds deeper significance, July 13th. This date coincides with Judge Torres's landmark ruling in 2023. Buckle up. Now, I know many of you think fundamentals just don't matter at this point, and to some degree you're correct. But I would much rather have healthy top-line revenue going into a potential swan event than the other way around. Box office. Despicable Me 4 heads for sparkly $120 million July 4 opening. Inside Out 2 crosses $500 million in US. Call me crazy, I'd much rather have full theaters than empty ones. Oh, Mr. Pantaleo. Dom, I'm sorry you have to hear this from me, but gold enthusiast Peter Schiff admitted he would be a lot richer had he invested all his money in the Magnificent Seven a decade ago. I notice he failed to mention how much richer he'd be if he didn't ignore crypto or Bitcoin. Bitcoin was the best performing asset of the decade. The data examined the top 17 top performing assets between 2011 and 2021 and found that since 2011, Bitcoin's cumulative gains have exceeded 20 million%. But never fear, Uncle Frank still believes gold may not make you rich, but can definitely keep you rich. If it wasn't for the 2 trillion plus crypto market, gold would trade in excess of 5,000 per ounce, in my opinion. But Peter Schiff is a coward and my least favorite gold bug because he doesn't have the integrity to admit he spent all his time bashing crypto instead of investing a little money into it. He reminds me of one of those guys that shows up in your chat bashing your stock, right? Hoping you'll sell yours and buy theirs. But Uncle Frank is here to tell you, fear not. Ripple announces tokenized gold coming to XRP Ledger. In what is certainly a massive development for the company, Ripple has announced that tokenized gold is coming to the XRP Ledger in 2024. Specifically, digital finance company Meld Gold took to Twitter to announce a partnership with Ripple that will see gold-backed stablecoins arrive in Q3 of this year. Q3. Additionally, the partnership will see a silver-backed stablecoin also debut on the platform. Moreover, the company stated that its decision to use the XRP Ledger was made due to the reliability and stability that Ripple offers in the tokenization and exchanging of both crypto and real-world assets. Earlier this year, we learned Ripple's XRP could be the key to gold-backed stablecoins amid potential adoption by global banks. Wouldn't it be ironic if it's cryptocurrency that ultimately unlocks the value in precious metals that gold and silver bugs have desired for the past 50 years? Stay tuned. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.